We spoke with Girik Capital yesterday, Mr. Varun Daga and Mr. Charandeep Singh. Great to gain perspective always from them. Here are some of the key takeaways from our conversation. They believe that markets have proven pretty much everyone wrong over the last year to year and a half. Despite being in the middle of a crisis, markets have continued to rise. And they believe that they have not seen so many sectors, a secular performance across sectors, do well together in the last 10 to 12 years. They give an example of 2009. So since 2009, markets have gone up 3x. And during the 2009 crisis, the secularity of the growth was not clear and the macros were not aligned either. At the moment, they believe that almost every sector seems to be doing well, from small businesses all the way up to large, as well as it's pretty much secular sector-wise as well. Further, they feel that in 2009, there were only 4 companies with profit pools of 10,000 crores or more. So reinvestment was maybe a bit low, versus now when there are 15 companies with the same amount of profit pool. So the opportunity here, the size here is far larger versus 2009. So they believe if in 2009 markets went up 3x, the next 10 years is going to be revolutionary. What they believe is that the next 10 years is going to be probably the most exciting times of our lifetime. They believe that if you are not worried or you do not need funds over a 3-year period, then it's time to go all in. And for those who can stomach the volatility over the next 10 years, the gains will be disproportionate according to them. They feel that they give again an example that over the last 13 years, markets have fallen anything between 10 to 38% at least 6 times or more. So volatility is part of investing, is what they continue to underline. And they believe that if investors are able to do that, the gains can be disproportionate. They believe that markets have kept pace with earnings growth, and the huge capex cycle, which they feel has played out to a certain extent, but is going to continue to play out with billions of dollars of PE and VC money, have created a multiplier effect within the economy, with jobs being created and consumption being spurred. So their strategy is for investors is that if you consistently keep adding money, you should be able to decently beat the last 13 years returns of 3x over the next 10 to 13 years. Now moving to sector specifics, they believe that metals may be slightly underrated in comparison to how markets are rating it. So metals are obviously cyclical, but they believe that 4 to 5 years of profitability within the metals stack may change that perception within the market. As regards Bajaj Finance has had a stellar run. It has moved up from 4,000 to 8,000 in probably around 6 months or so. Now this has shocked pretty much everyone, but there is a clear visibility of growth for the company. They believe only a company, this is a company which has acquired almost 50 million customers without a banking license. It's probably the only company to be able to do that. Now that requires phenomenal execution, which is why the premium is commanded. And they have virtually gained these customers without really spending any money, without burning any money. In fact, by making a profit. And that's what they believe is the real sell point. So what they feel is that now these acquired customers are great cross-sell opportunities for the company. Further, on tech and platform, they believe that tech along with paid users, along with profitability, is a great combination to have, and there can be a lot of traction around stocks like that. On the auto pile, they believe that they're happy to wait while the cycle clears up to try and understand what kind of future auto holds, whether EV or otherwise, and they are willing to wait it out. With regard to specific plays on platform again, they feel Nykaa, Policy Bazaar and Zomato in that order are fantastic companies to invest in over the longer period of time.